Good evening, and welcome to the Crypto Overnighter. I'm Nikodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on a Thursday, April 20th, 2023. Lawmakers in the European Union approved a new crypto licensing regime. It's called MiCA, for Markets in Crypto Assets. And its passage makes it the first major jurisdiction in the world to introduce a comprehensive crypto law. Now, the vote was 517 in favor, 38 against, so a landslide. There were 18 abstentions, and the European Parliament also voted in favor of another law, one not nearly as popular. Known as the Transfer of Funds Regulation, it requires crypto operators to identify their customers. The claim is that this will help combat money laundering. I have my doubts. The vote follows a Wednesday debate, and during that debate, lawmakers largely supported plans to make crypto wallet providers and exchanges get licensed. It will also require issuers of stablecoins tied to the value of other assets to maintain sufficient reserves. Fiat-backed, no algorithms. In a tweet, the European Commission's Mairead McGuinness described the vote as a, quote, world first. She said, "We're protecting consumers and safeguarding financial stability and market integrity. The rules will start applying from next year." Stefan Berger is the lawmaker who led the negotiations on the law. In a statement released by the European Parliament, he said the rules put the EU, quote, at the forefront of the token economy. He said, "The European crypto asset industry has regulatory clarity that does not exist in countries like the United States. The sector that was damaged by the FTX collapse can regain trust." The European Securities and Markets Authority, or ESMA, also welcomed the vote. In a tweet, they said that they would, quote, announce in due time their timetable for drafting the secondary legislation under MiCA. Quote, ESMA still warns consumers that investing in crypto assets is a risky endeavor with limited safeguards at this stage. Now, the Markets in Crypto Assets regulation was first proposed by the European Commission in 2020. To pass into law, it had to be approved by the Parliament and the EU's Council. So the Council represents the bloc member states. MiCA's main provisions start to apply just over 12 months after its publication in the EU's official journal. That is likely to happen in June. So what does this mean for the industry? Well, MiCA's passage is a major milestone for the crypto industry. It gives us some much needed regulatory clarity. It sets a framework for the responsible development of the crypto sector. These new rules require crypto businesses to obtain a license to operate in the EU, which means they are subject to them for a range of other requirements. These include capital and liquidity requirements, customer due diligence, and reporting obligations. Such requirements are intended to protect consumers and investors, but they will also help ensure the stability of the financial system. The approval of this regulation could be seen as a vote of confidence for the crypto industry. It shows that the EU is committed to supporting the development of this innovative sector. These new rules will not be without their challenges. Some businesses are going to find it difficult to comply with the requirements, which brings the risk that they may be driven out of the market, which is just bad for everyone. The overall impact of MiCA is likely to be positive. It promises to help create a more level playing field for crypto businesses. And it's also intended to make it easier for consumers and investors to access the crypto market. At the end of the day, it provides much needed regulatory clarity, and it sets forward a framework for the responsible development of the sector. Even so, European Union lawmakers are expressing skepticism about the benefits of a central bank digital currency. On Wednesday, lawmakers raised concerns about privacy, state control, and the role of banks. Markus Ferber is the economic spokesperson for the center-right European People's Party. He said, quote, "There's one central question which hasn't been credibly answered, which is what is the added value of a digital euro? What can I do with a digital euro that I can't do with current payment options?" Ferber also expressed concern that a CBDC could give governments too much control over people's finances. Aurore Leclerc is a French lawmaker, and she said, quote, "We're jumping into the digital bandwagon because it's fashionable and trying to deliver it with forceps." She continued saying, "I think you need to be extremely careful." The European Central Bank is set to announce their decision about the digital euro later this year. Ahead of that, officials want lawmakers' consent for any legislation that would be needed to accompany the CBDC. So a similar situation to the US and Jerome Powell's position, that Congress needs to act to authorize a digital dollar. Now, to be clear, Mairead McGuinness is firmly on the side of a CBDC. She said, quote, "If we don't provide our own solution, then we run the risk of private stablecoins or foreign central bank digital currencies filling the gap." McGuinness said that the bill that she's working on will cover a range of issues, including the euro's status as legal tender, the compensation that private operators would receive for distributing the currency, and privacy concerns. McGuinness said, quote, "This is not a Big Brother project. We should not address this issue to citizens in this chamber as any sense of a project of control. It's a product of choice." Now, it remains to be seen whether lawmakers will be persuaded by her arguments. Frankly, I think she's spouting banker nonsense. However, this debate has highlighted the challenges that the ECB faces in launching a CBDC. Now, if you're enjoying the Crypto Overnighter, I'm going to ask you to like, follow, and subscribe to the podcast. It's a huge benefit in seeing new people find their way to this show. So thank you for helping out. Now, McGuinness of the European Commission sounds worried about commercial stablecoins. Stablecoins are not finding a lot of support in the United States either, at least not from Democrats. A bipartisan bill to regulate stablecoins, bipartisan, is facing skepticism from key Democrats. The House Financial Services Committee held a hearing on stablecoins on Wednesday. This meeting saw Republicans praise the bill, while Democrats called it outdated. Representative Maxine Waters, a Democrat from California, said that the bill was a joint effort. That said, negotiations over its provisions remain incomplete. She also noted that a lot of things happened in between last fall and Wednesday, things like the collapse of the FTX exchange. Waters said, quote, "Mr. McHenry alarmed me somewhat when he said that the members on his side of the aisle had come up with a whole new bill. This posted bill in no way represents negotiations between the two of us. I think we're starting from scratch." Waters also said the committee should move very quickly on the updated bill. It always worries me when the government moves quickly. The government is just not good at rushing things very effectively. On the other hand, we have Representative Patrick McHenry, a Republican from North Carolina, and he took a different tone. He called the bill a bipartisan baby named, quote, Maxine McHenry. He said, quote, "It's here today for both sides of the aisle to review and to consider and to hear from our panelists. So today we're going to discuss it, think about revisions. How do we address the benefits and risks described in the Biden administration's 2021 report on stablecoins?" Now, his counterpart across the aisle is Representative Stephen Lynch of Massachusetts. Lynch is the senior Democrat on the Digital Assets Subcommittee. He said lawmakers should question, quote, "whether stablecoins are even needed." He said the draft language released by the Republicans is outdated. He claims it doesn't reflect any of the lessons learned from the implosion of the major crypto firms last year. I'm here to tell you, though, the need for a federal bill on stablecoins is apparent. It is abjectly foolish for us to continue on this way, and it appears that Representative McHenry would agree with me on that. He said, quote, "It is important for us internationally and domestically. It's very important that we have the understanding on a bipartisan basis, the utility and importance of this legislation." The House stablecoin effort was the most promising crypto work taking place in Congress last year. It was surprising to see the top members of the committee agreeing on most of the key points, even as the Treasury Department also weighed in. Now, sadly, McHenry and Waters were unable to get it to the finish line in the committee, which came as no big surprise to listeners of this show. I said then that Congress is way too divided for any real legislation to get through. And it's even more divided now that the control of the House has shifted to the Republicans, while the Democrats control much of the rest of the federal government. That's evidenced by the fact that there's been no substantial talks between the two parties. regulating stablecoins should be a priority of U.S. financial agencies, especially since the ill-informed see them as potential threats to future financial stability. Lawmakers from both parties argued that this narrow slice of the industry could be handled more easily than a more comprehensive bill. One of the big questions is whether any legislation can win the support of Senator Sherrod Brown. Now, he's a Democrat from Ohio. He's important because he's the chairman of the Senate Banking Committee. So far, he hasn't made any definitive comments about his position. Meanwhile, other Democrats in his committee have suggested that granting the industry any tailored oversight may just encourage a sector that they think is too dangerous to exist at all. So we know where they stand on that issue. A spokesperson for Brown said that the senator was, quote, continuing to look carefully at all the different approaches his colleagues have put forward. I don't think that the House and the Senate can come together on a stablecoin bill or anything else of any importance, to be quite honest. Which is sad, because the stakes are so high. The stablecoin market is now worth more than $150 billion. The stables are increasingly being used for payments and other financial transactions. If they're not properly regulated, they pose a significant risk to the financial system. The U.S. government has agreed to allow the bulk of Voyager Digital's $1 billion sale to Binance US to go forward. This, despite concerns that the fine print of the contract would pardon or excuse breaches of tax or securities law. And that was one of the sticking points for the deal. U.S. authorities do not want to let them off the hook. The April 19th filing proposes that the parts that would remove blame for any crimes should remain on hold, but they shouldn't hold the remaining parts of the deal up any longer. Their lawyers say they're worried. They're concerned that once a 4-month deadline expires, Binance US could pull out of the deal. That would inflict an extra $100 million loss on the estate. Now, an attempt at speeding up the proceedings was rejected by judges at the Second Circuit Court of Appeals in an April 11th ruling. So this deal is a key part of Voyager's bankruptcy plan, a plan that was approved of by a bankruptcy judge back in March. It calls for Voyager to sell its assets to Binance US and then to use the proceeds to repay its creditors. The US government doesn't like it because it gives Binance US a get-out-of-jail-free card. They want to be able to hold Binance US liable if they are found to have violated any laws. And the US government is concerned that this deal will set a precedent for other bankrupt crypto companies, a way for them to avoid liability for their actions. The parties involved in the deal are still working out the details of how all the provisions will be handled. It is possible the government will eventually agree to drop all its objections to the deal. However, it's also possible that the government will continue to fight the deal. That would delay or even derail the sale. The outcome of this case is likely to have a significant impact on the future of the crypto industry. If this deal is allowed to proceed, it does set a precedent. It tells other bankrupt companies that they can sell their assets and exit bankruptcy. However, if this deal gets blocked, it sends a message. The U.S. government is not willing to tolerate any wrongdoing in the crypto industry. This case is still ongoing, and as such, it's too early to say what the outcome will be. However, the case is likely to have a significant impact on the future of the crypto industry. The Bank of Russia is working on a bill that would allow the use of cryptocurrencies for cross-border payments. This bill would create an experimental legal regime for the use of cryptocurrencies, and that regime would only apply to payments between Russia and foreign companies. Cryptocurrency trading and payments within Russia would remain banned. Now, as far as why, the Bank of Russia has said that it's concerned about the risks of cryptocurrency speculation and volatility. They're also working on a bill that would create a national agency, set up to license and supervise cryptocurrency platforms operating in Russia. It would also introduce a new tax code for miners. The Bank of Russia and the country's Ministry of Finance earlier agreed that Russia cannot avoid using crypto payments during the current situation, which is about the only thing that they agree on where crypto is concerned. And that really reflects the different roles of the two organizations. Now, Russia, of course, is facing international sanctions. Sanctions that exclude Russia from the US dollar-powered global payment infrastructure. The use of crypto for cross-border payments is a growing trend. In 2021, the value of cross-border payments using cryptocurrencies reached $15 billion. The use of cryptocurrencies for cross-border payments has a number of advantages. Not only is it faster and cheaper than traditional methods, it's not subject to the same regulations. However, there are still some risks in that they are volatile and can be hacked. Now, it remains to be seen whether Russia's experiment with crypto for cross-border payments will be successful. However, this move is a sign that the country is open to using cryptocurrencies in the future. And finally, we get to chalk up a win for the good guys. A court in the Netherlands has ruled that the Russian developer Alexei Pertsev can await trial from home. He's been held without trial or bail since August. And he was arrested because he worked on the code for Tornado Cash. He was arrested last summer on the orders of the Dutch financial crime authorities. However, he's still behind bars tonight and will be for the next week. This delay will allow time for the installation of electronic monitoring devices in his home. However, he will still not have to make bail. Now, this scenario isn't just noteworthy because of how long Pertsev was held. It raises important issues about privacy on Ethereum. Because Tornado Cash had already been sanctioned by the U.S. Office of Foreign Assets Control. OFAC claimed that Tornado Cash was used to raise funds for the North Korean regime. Now, the Dutch public prosecutor has previously argued that Pertsev posed a flight risk, and that he might hide evidence if he was released. However, until this week, the prosecutor had only made generic accusations. He couldn't really point to anything specific. Now, this week, more specific charges were issued. They claim that Pertsev laundered over 500,000 Ethereum. They say that he should have suspected that that crypto had criminal origins. Pertsev has denied those charges. A further investigation hearing will be held on May 24th. We'll see what happens from there. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.